do not use the cheapest material. Do not let your general contractor or your handyman pick out the flooring, because these are things that the incremental difference, it might be 10% more, and we all know what cheap feels like. And I think that's a
Mm-hmm.
fact. If you say to someone, you take the emblem off a Ferrari or another car and say, is that a good car? A child could tell the difference. We know quality. Quality feels different. And so to me, there's a million ways to just say, don't do builder grade, do one step above.
Welcome, my fellow flow masters, to another episode of the Cash Flow Authority podcast. I'm your host, Chris Jansen, founder of the Flow Authority, and this show is for high-performing professionals who did everything right: the degree, the career, the income, but you just feel like there's another level waiting. And here we explore how real estate can become that next challenge worth building so you can take ownership of your future and create a life by design. Now, today we're joined by a special guest, Mr. Michael Abraham out of Los Angeles. He's a Los Angeles-based luxury real estate agent with Compass and co-founding member of the AMRE Real Estate Group, advising buyers, sellers, and investors across the greater LA market. He's a licensed architect with a master's in architecture from Pratt Institute, and he's also an experienced real estate investor. Brings a design-driven, analytical approach to property valuation and value-focused strategy. Lots to say about you, Michael, but I'm glad to have you here on the show. Thanks for joining us today.
Chris, thanks for having me. If I knew you were going to say the whole intro, I would have been more accommodating and cut it down to one line. But thanks for giving
All
that great
good.
bio.
All good. We have to talk about the architecture. So can you talk about how, that background in architecture brought you into investing and the brokerage world and how those synergies kind of line up?
Yeah, I think one, thanks for having me on. I am an investor as well. Although I do focus on luxury, I do a lot of multifamily and duplexes. And as LA is the king of the duplex, we have a lot of, which is basically just two units on one lot, and they come in different shapes and sizes. So I went back to school for architecture. I did it for a number of years. It wasn't for me perfectly. I liked it. I didn't love it. And when I arrived in LA almost 20 years ago, Silicon Beach was taking shape. Essentially, a lot of the SF investors were realizing there were other ways to invest outside of just tech, and there's entertainment and culture and a lot that makes LA unique. So, although I am a licensed architect and I do bring it back into what I do as an investor, I ended up running a marketing and design for many years. And when that company was acquired, during that process, I started buying duplexes and multifamily in LA. And then I decided that I would go full time into being a realtor and also an investor. And eventually I hope to be a developer. And the delineation I see between investor and developer is, to me, a developer really is something more ground up, where they're taking something and it's from a piece of dirt to a building. So I'm not quite there yet. And I would consider even building an ADU, a single unit, as a developer. So I'm still in the renovation phase, which would say a hands-on investor.
Amazing, amazing. You probably don't know this, Michael, but I'm actually a civil engineer by trade. We might have to link up at some point if you
Of
do get
course.
into development. Yeah.
Yeah, for sure.
I'm transitioning to Dallas right now, and one of the reasons I'm doing that is I have two business partners out there that have built single family and duplexes, and so we're going to be doing some land development, looking to get into multifamily, but might start with like townhomes and subdivisions like that first. But yeah, it's an exciting world. There's just so much with real estate you can do. Some people get overwhelmed by that, I think. Do I buy existing assets? Do I buy single family, multifamily, residential, commercial? Do I develop? Yeah, it's interesting to see that you're making that transition or thinking about that transition as well. When you're looking at properties, what signals a strong deal with kind of long-term upside? How do you identify any sort of hidden value in a property that you're looking at?
I actually was starting to put together like a multifamily investment thesis. I don't have it in front of me, but I do recall some of the key things, and it wasn't complicated. One, I'm a
Right.
believer in real estate like yourself, and I see this as a common thing. You'll see a whole podcast: don't rent, buy, and then it will always follow up with the product they're trying to sell. So my initial thoughts are, there's many ways to be successful. Real estate is one of the most tried and true and the most formulaic ways to becoming successful. You want to be a billionaire, build a rocket company or a SaaS platform or something like that. That's not my strengths. So for me, I look for properties in areas that I call adjacent to Main Street. So an area that I feel is where people want to congregate and go. It doesn't need to be next to it because that would obviously be more of a premium, but near it. I believe there's the term flight to quality. So I want to buy properties that stand out, whether they're architecturally interesting, they give my tenants outdoor space, we can accommodate pets. There's flexibility. So flight to quality, I want the best in that neighborhood. Doesn't need to be the best neighborhood. I definitely want to feel like it's appreciating market. And what I look for is also accessibility to amenities that are not going anywhere. So universities, we still need to be educated regardless of AI. Large hospitals, they're not going anywhere. So I think the confluence of all these things, and then ultimately hyper local, especially in Los Angeles, one street over can be a radical difference in what it feels like to live there. So all those collectively, and then what I do is, and this is something people don't appreciate, is everybody thinks you go on Zillow or Redfin, and I'm a Compass agent, so not being disparaging, but basically it's not all public knowledge. All the listings are public, but there is asymmetric information, and what that means is we talk to agents. You and I pick up the phone, we get a lay of the land, and not everything is revealed online. So I also want to talk to people, understand their motivations for selling, because there's three things: speed, certainty, and price. And all those are a contributing factor. Everyone thinks price is the only one, but either if you do a deal quickly or even if you do a deal slowly, they both contribute a lot to the seller's motivations.
Are there other terms other than that you look at that you try to negotiate to beyond price?
What I'm trying to do is find a deal that works. And what you run into in LA is working with tenants and making sure that if you need to do a value add and reposition the property, and this is something that really applies anywhere, I would never want to kick out anybody, nor are you allowed to. However, if you can find an amicable way, say, listen, you're paying below market by a lot. We're prepared to give you X amount of money. Would you take this money? And the reality is it's a yes or no. They can simply say no, and that is the end of the conversation. However, if they say, sure, you know what? I'm thinking about buying something. We had one client or one person we worked with, he bought a tow truck, changed his life. He took that money, invested it into something. Another one was starting a restaurant. Boy, he was happy to get the cash and move closer to his location. Other people, they're like, I can't find anything as good as this, and they say no. So flexible tenants would be a factor as well. So location flexible tenants. And then beyond that, just does it financially pencil out? I am not an Excel nut. I don't focus exclusively on that because I think that there's a lot of power in owning real estate that isn't in Excel. I think when you start getting into commercial, 5 units, 10 units, 100 units, you got to pencil out. You really do. But even them, even that cannot always work out. So
Yeah.
I think, what can I do to make it wonderful? That's my end goal: is make a property people want to live in.
Nice. That's a very different approach for most investors, I'd say, at least that I've talked to. I'm an Excel nut because I'm an engineer. But
Yeah, there you go.
that's another side of it. But I hear you for sure, especially, like with the smaller stuff. It's not rocket science. It's pretty straightforward numbers. A lot of times I'll do really quick underwriting, just literally pull out my phone calculator, type in the current rents, type in what I think the rent should be. But you touched on something really interesting. I didn't even have to ask as far as how LA markets are and how LA policies are, just California policies in general. Because I mentioned to you earlier, most of my properties are in the Midwest. We don't have that problem. If we have tenants that are paying 50% of market rents, sorry, like they gotta go. And that's just, it's the dirty business, but it's a business, so it's part of what it is. But it's interesting how you handle that out here. So you also mentioned value add. What are some value add opportunities that you look for that actually work? Because I know for newbie investors, I can make these improvements, but they don't always add value. They don't always add the value you're looking for. They don't always increase the rents, but sometimes they do. So what value add opportunities do you look for in your deals?
So the average inventory in LA is 60 years old, and I would say a lot of the duplexes are over 100 years old. So you're looking at very old buildings that essentially are just barely functioning. They've probably already seen a few renovations. What I look at, is there a demand for a high quality product in this area even if the surrounding market isn't quite as high a product. And it goes to the idea of flight to quality. So, for instance, someone might need to live in an area because they need to be near school, near work, or their business, and they actually over-index in their income. So they still want to be there and they want the best thing there. So my experience is when we buy a property, we basically, I would say on average, I hate to say the number out loud because it even bugs me. It's between 70 and 800 per square foot is the renovation cost in Los Angeles. So you can do the math on 1,000 square feet. It's a lot. But we're looking at it from the simple process of the cap rate analysis, which I assume you've broken down for your audience a million times. If you understand that, which is super simple, and if you don't, talk to ChatGPT, it makes everybody a financial wizard, at least a lot better. You realize for every incremental dollar you can increase the rent, the value of that property goes up exponentially. So typically, it just pencils out. So for me, the big things are a new coat of paint. If it's a hardwood floor, bring it back to life. The kitchen is still the home heart of a home. Make it nice. Bathrooms clean. You don't need to gut anything. I would say do just enough to make it livable, unless it's a market where it demands like next level. But what I will advise: do not use the cheapest material. Do not let your general contractor or your handyman pick out the flooring, because these are things that the incremental difference, it might be 10% more, and we all know what cheap feels like. And I think that's a fact. If you say to someone, you take the emblem off a Ferrari or another car and say, is that a good car? A child could tell the difference. We know quality. Quality feels different. And so to me, there's a million ways to just say, don't do builder grade, do one step above. And if you don't know how to pick out things, one, look at references or talk to an interior designer. A lot of people make the mistake. They think, oh, nobody cares if the floor is just linoleum gray or crappy. They do. People know. So make it nice. This is going to be someone's home. They're paying a lot of money for it. So if you treat it with respect, they will too.
Yeah. That's really good. And I'm guilty of that myself. My first renovation project, and I don't really do much renovation. That's just not my area. But my first renovation project, the contractor I hired, she was my go-to. She was my property manager as well, but she was also a licensed contractor. So I just trusted her a little too much probably. I'm like, she gave me a quote. I liked it. I'm like, just go with it. Here's all the things I want fixed, but I didn't pay any attention to any materials, nothing. I'm just like, I like the price. It'll add the value. And no, it was not good. I'm not going to badmouth her. But anyways, the tenants basically came back later and destroyed half of it because it was so poorly, the materials were so poor. And they basically said, yeah, this was cheap to begin with, is what they told me.
Yeah.
Obviously, there's two sides of the story, but I ended up having to redo it again. And not everything. I used better materials the next time. It appraised for the value I thought it was going to appraise for the first time when I actually put some thought and time and energy into it. So I've experienced that myself. So appreciate you mentioning that.
You need to be hands-on. If you're going to get into flipping or renovating or owning real estate, if you don't like to go to Home Depot or Lowe's, don't do it. You can have somebody do everything for you, but essentially you're creating a job for yourself. I think that's the misconception. You buy stock, it appreciates. No one asks you for anything. No one's asking you to attend board meetings. You don't do anything. And you can work your way down from passive. The most passive thing is buying crypto or stocks. And then you kind of go down. And real estate, I would say, is maybe the least passive. But also, once you've established getting something operational, it might be every day you go to the property for the first 2 months. And then you go once a month. And then you go once a year. And that's where the passivity comes, is that you don't have to monitor it as often. So in the early phases of designing something, it's not hard to discern good versus bad. Go into some other open houses in your neighborhood, take some pictures, upload to Google Lens, find a comparable product. Honestly, if you really don't know what to do, go to your neighborhood, see what property is sold over asking, and say, I'm going to redesign it based off of that, and find a comparable value-based version. You don't need to be, I don't go and tell my tailor, make me a new fabric. Well, I don't go to the tailor, but you follow my logic. I say, give me what people like. Go blue suit, go brown suit, go black suit.
Exactly.
And then if you're really creative, good for you. Then break the mold. But I don't think you should try to break the mold when you're just trying to do a renovation.
Do what works. You don't need to reinvent the wheel, right?
No, you don't.
You're pulling comps anyways, so you can see from the photos, you can see from all that stuff, the type of quality that they put in there. Love that. So talking about passive versus active.
Mhm.
I generally think multifamily, I guess it depends. If you're the general partner versus the limited partner, obviously the limited partner is
Sure,
going to
that's
be
fair.
100% passive, right? But
Yes.
I do, in my mind, think multifamily a little more passively. What have you learned from owning and repositioning multifamily properties, and specifically in rent controlled markets like LA?
Yeah, you made a really good distinction. I am not a limited partner in anything. I'm a hands-on partner.
Yeah,
I think only becomes relevant when you don't want to be fully immersed in the project. And right now, that's still where I'm at. Maybe
right.
one day I'll be writing checks for someone else to do the work, but partly I do enjoy the work. So your question was about repositioning in LA. Is that what it was?
Yeah, so just what have you learned, like kind of lessons learned from both owning multifamily and then repositioning multifamily in LA?
What I've learned is we have a system that rewards home ownership as much as people don't want to acknowledge it. And what I mean by that is the greatest asset class in the world is real estate, period. Some excessive, it's, I don't know, something it's like $430 trillion. It's something insane. So, that being said, on the micro level, until people stop wanting to come to Los Angeles, then probably it's not the best bet. But I see LA actually on an inflection point where it's going to keep getting better in spite of the politics, in spite of the negative and the challenges. And with that being said, on a micro level, people want to live here, and if you provide a quality product, they'll rent there. With that, as you as the value of your properties go up, which is an appreciating market, it makes refinancing a really lucrative way to continue to roll your money into other investments. I've already done it more than once. And really, I've been in the real estate game, I would say 7 years. And I recently reflected on that. And I basically have had a 7 year apprenticeship, which is about 7 to 10 years. I didn't put two and two together, but I'm actually in escrow on a property as we speak, which I'm happy to talk about. And it dawned on me that I'm learning every day by talking to people like yourself that know what they're doing or they can share their wisdom. I have partners that have been doing it for a long time. So gather as much information as you can, talk to everybody as you can. You're going to be taking a leap of faith. If you can do a duplex and you own one, you mitigate some of the risk. But in the end, I always believe you should own your home. And then beyond that, if you never buy another piece of real estate again, that's great. LA is an appreciating market. There's demand for this market. And if LA can
Hmm.
get out of its way, I think the sky's the limit. And so I'm here to advocate for a lot of systems and trying to be more involved in policy. Cities that are appreciating are different than that are cash flowing. But ultimately,
Hmm. Hmm.
this market has its own challenges, but the reality is every city has something you have to navigate around. Rent control is a factor. That being said, NIMBYism begins anywhere. Texas was, oh, we can do what the hell we want until you own a single family home on an acre and someone decides to pass a bill that you can now build a multifamily next to you. Now
Hmm.
suddenly do what you want in it's Texas ain't going to fly.
Hmm.
So eventually we all face big city problems, in my opinion.
Hmm.
So you're going to deal with it eventually somewhere. That was a very long-winded answer.
Gotcha. Gotcha.
I will shrink them
I'm
moving forward.
curious though about like why you think, I don't know if you can go more into why you think
Yeah,
it's an inflection point and that things are going to keep going up in LA.
sure.
Um, just I don't really invest in LA. I'm in Orange County. I'm investing out of state more for cash flow. My thought was always one day when I have enough cash flow and I'm comfortable with that, then maybe I'll go back and start buying some high appreciating assets when I don't necessarily need the cash flow as much at that time. But LA has always scared me because of the policies that are in place, and they seem to be getting worse from an investor standpoint. I'm not going to pretend I'm a politician that knows the answer, but I don't know if I have opinions. So, anyways, just curious where that, yeah, where that inflection point is coming from.
On a micro level, there's always opportunity in every market to buy something, renovate something, and rent something at a premium. We are in an appreciating market, and it's been that way, and maybe it will change. I don't see that happening, primarily because it's still a very desirable city, and it is a bastion in a way against some of the things that we don't care for going on in other states. I'm not political. I don't see things drawn along those lines. I see LA as an entrepreneurial hub for creativity, technology, the arts, and if we can get out of our own way and make LA what I think it is ultimately the most pioneering entrepreneurial city in the entire country, then we still will always have a place that will attract some of the smartest, hardest working people. We need to do everything we can to streamline that process. That being said, yes, we are hamstringing our ability to succeed. And it's someone like myself that's still willing to invest in the city and make the effort. If I were to look at the
Hmm.
entire city from here down to where you are, I would look really hard at Long Beach. I would look hard
Mm.
at San Pedro. I would look at other places where I did some quick analysis. The price per square foot to buy and the delta between what you can rent at is pretty good. I
Yeah.
would say that I also need to be on top of my properties. So until I have a team that's going to maintain and look and secure it, I still have a better chance of being successful knowing a market down to the street level. If you get big enough or savvy enough that you can literally just look at a property based on its financials, then I would say LA has a lot of disadvantages.
Mm.
But at the same time, this is what I know, and there's a deal to be had here if you're looking for it. But it's a different deal than you might get. The cash flow might be worse, but the appreciation play hopefully is better. There's still a lot of demand. And I think Austin's kind of getting a little bumpy ride. They did a lot of building, the prices went up. And so it's not as affordable as it used to
Yeah.
be. And therefore, the
Hmm.
dynamics are changing. It used to be so affordable. In the end, I'm hoping that, and I could be wrong, we might not be steering this way, between the Olympics, between the light rail, between the number of projects and investment going on. Why did they pick LA to do the super fancy pop up restaurant minus the bad press? They did it because this is the cultural hub in many ways of the country. It doesn't make it perfect, but it's not
Yeah.
for everyone.
Hmm.
So I'm a
Hmm.
believer in LA in spite of itself, I guess I could say.
Nice. Nice.
Yeah.
Nice. I mean, to the listeners, if you're in LA or you're looking in LA, Michael's your guy because he knows to the street level, okay? And that's what
Yeah.
that sounds like. Again, for me, I'm a spreadsheet guy, so that's why when I look, I'm like, oh, this is looks terrible. But there's a lot more that can go into it beyond that. So if you want to look through it at with a fine tooth comb and you want to find those micro markets, you need someone like Michael on your team. So that's great.
I will make the distinction. I know people that don't want to invest in LA
Uh,
and they're looking at other cities and they're looking at it a little differently. And I think typically, if you're deploying a lot of capital, you are thinking about it a little bit differently than here because of the challenges and the process and life and the timeline. If you
mhm.
just need a place to stay and you're committed to living in Los Angeles, then try to find a duplex. That's a
Yeah.
great way to just
Oh
get
yeah.
involved. It's not your forever home. You're immediately offsetting your mortgage every single day. Make it nice, live there, and then use that as a cash flowing asset. That is what I would recommend to someone. If you're looking just to invest in real estate, that's not my specialty. I don't give other people money to invest in real estate. So for me, that's a little bit of that's
Yeah.
your expertise. I
Yeah.
would say you tell me where you want to live, and I'll find you a property that's an investment that also facilitates home ownership, and that I think is a great way to get into the market. And then beyond that, you do one
Mm.
renovation. It's a couple months of headache, and you never do it again. Great, that's fine. I don't think people need to become real estate investors, although I do think it's a great way to build wealth for a variety of reasons.
Hmm.
It's not the only way by any means. It's just the way that I know fairly well and the one that I think part of it is formulaic and therefore you are managing risks. There are a lot of other investments. You can maybe invest in a restaurant and you could be the next huge success like Blue Bottle, or you can go under, which
Hmm.
is very possible. Typically real estate at least holds its value, even
Yeah.
if it doesn't necessarily appreciate at the same rate other businesses. So that's where I often find when you see those podcasts talk about alternatives, there are all plenty of alternatives that are better. But
Yeah.
I would say that you have to spend money on rent. So at least put that away towards something that you're building equity in. And I've done the numbers a million ways. The duplex investing in LA, and I have even a press spreadsheet I had to break down because I couldn't believe it. I can't find a bad thing about doing that investment.
Yeah.
I really just can't. Mine is, you don't like your neighbor, but you can even do Airbnb, and therefore your neighbor keeps changing. Or you keep that as a
Yeah.
second. What I've done is I kept my second unit as a unit that I could share with visitors, and so it was a nice alternative to both collect rent and also have a guest home.
Nice. And I have a friend in LA. Her and her husband owned a townhome. I'm trying to remember if it was no, I think it was East LA. But they now Airbnb that thing, and it's a cash flow machine. So that might, depending where you are in LA, if it's a desirable place, people are always coming to LA, especially when it's cold in other states and they want to get away. They'll come out to LA, and there's always stuff going on, concerts and shows and things. Airbnbs, I didn't even think about that, but yeah, like I said, my friend, she's making thousands in cash flow just she bought. She didn't plan to make it into an Airbnb, and then later on she did.
Here's, Chris, something that I haven't really worked through the financials, and you can break out the Excel. Is if
Yeah.
you look at a property, and let's just use round numbers, a home is $1 million here, and a home somewhere else is 500, and if they appreciate the same rate, obviously, let's just say 5%, one's 25K, one's 50K, but the cost to replace the roof is probably pretty comparable in those locations. So there's
Hmm.
probably the sweet spot where what you're spending versus the maintenance versus the rent roll and the appreciation that locks together in a nice way.
Hmm.
I don't want to own 100. I don't want to be investing at $100,000 clips. That would be a lot of work, a lot of maintenance. Now, that being said, there's a strategy could be I'm going to get 20 of those. If that's your strategy, and I think that's more of a wholesaler play, it can work. But if I had to give any advice, is one, just focus on an area you know well. And if you know, then the likelihood is if you're willing, and also buy somewhere that you're willing to collect your rent. That's
Yeah.
something I heard once. Don't buy somewhere that it's so cheap that you're scared to go there. But more importantly, buy a place that buy in an area. So if you think I keep running into the same friend. He's, if I only bought 25 years ago, and I keep saying, this is the thing you keep telling me, but you're not going anywhere.
Yeah.
So yeah, maybe it's a lot more expensive, but you acting like somehow you're now leaving the city. You're not going anywhere. LA is prohibitive in a way, and I do think it's frustrating. The solution and the politics are all nonsense. They keep blaming everyone but the problem, which makes me nuts. The
Yeah.
problem is
Yeah.
that we do not facilitate housing. We do not facilitate different sizes and shapes of housing. We should have dormitory style housing right out of college. We should have workforce housing. We should have townhomes. Then we should have single family. This mansion tax is nonsense because it's a misnomer. It's actually a tax over half 500,000, 5 million, and it could be a multifamily. It's not mansion. So the city really does a terrible job of tricking people into blaming someone else for their problems. And I think we need to move from away from this idea of penalizing one group in service of another. The
Right.
simple
Right.
reality is we make it. I heard a great stat. It took 2 years to build the Chrysler building, I believe it was, one of those buildings built like in the 20s, 30s. It takes 2 years to get permitting done now in San
Mm-hmm.
Francisco. So
Mm-hmm.
look at that, and that building's still standing. It hasn't fallen over. We are our worst enemy, and I just think we're.
Yeah.
I go on and on. It's just frustrating because we're really. It's a disservice to us. And maybe Dallas, I'd love to catch up and see how your experience is living there, and if the market is easier to navigate. But I know that if we were to make it quicker and simple to build here, more money would flock here because it's a great place.
Yeah. And definitely on the development side, I get that for sure. Yeah, anything permitting. With my engineering, I mostly worked. My our clients were always almost always municipalities, so it was
Interesting.
easier for us because we're working with the city who's approving the plans. But nonetheless, it was still a pain, even in that situation. But yeah, that's one side of it that I don't know, cost wise, time wise. Every month you take to wait for permits, you got the cost of ownership and carrying costs that you're paying. So, and investors and all those things. But people do it. People make it work. It's just knowing your numbers, knowing the process, but you got to be aware of all those things for sure.
People keep building in LA, but not at the rate they can. I just saw a political ad. I
Mm,
forgot who it was for, and he's going on and on about how investors are buying up all the homes, and that's creating the disparity. It's just hogwash.
yeah,
It's just
yeah,
complete nonsense political jargon
yeah,
that's misleading people into blaming one group. The reality is you could create so many simplified rules I go on and on. It bugs me a lot because I know it well enough to know that whether you renovated a bathroom or build a building from the ground up, you always encounter challenges that are illogical and actually don't service in. It's called building and safety. That's the goal. It's to help the
mm-hmm,
buildings built safely. That's their only job, and
mm-hmm,
yet that's not what they do. They disrupt the building process in a way that loses sight of the goal. I heard something simple, and I have to research this, and I've been meaning to. The idea of entitling a piece of property. So I want to turn something into greater density. I read. I need to verify the story. It was like $2 million to get the entitlement done, and I don't know. Most of that went to the government,
mm,
and they decided not to do the project, even though they were going to spend 90 million. Now, this is all hypothetical. Could be entirely just using this as an idea. And so they dissuaded them from building a property for 90 million. If you're building a $90 million property, you're paying taxes on, let's just say 1%. So that's $900,000
mm,
once you're finished. So in 10 years, you would collect $10 million in taxes versus 2 million up front.
mm.
I think there's someone who's misaligned that I want the money now because it makes my department look like we're doing something right, as opposed to delaying the money now and the next elected official is the one to collect it when we need to think on a longer timeline. To me, there should be no upfront burden. You should just be able to amortize that once the building is up and running. I need to research this more. I need to understand this more. Maybe you know more about it. But I think that's one of the biggest challenges is that upfront cost is being piled on, and even trying to get permits to build a home in Santa Monica, you'd be shocked at the prices. It's tens of thousands of dollars. What are they doing? It's illogical the way that they're penalizing people to build things. That's not big companies. That's individuals. I use this line: if you have enough money to build an ADU, you have enough money not to. You got 400 grand in your bank account. You don't need to build an ADU. You don't need to provide more housing.
Yeah, there you go. Man. Hey, I appreciate your time. A bunch of questions I could ask. We could sit here all day. You're a wealth of knowledge, so I appreciate your time today. I do want to give you an opportunity before we wrap up. Where can people find you? Where can people connect with you?
I think you'll probably have it in the notes below. My handle is online. It's michaelabraham.realtor. And then that's probably the quickest way, michael.abraham@compass.com. It's easy to track me down. I've done a pretty good job of that. I love talking about this, as I know you do. I will give anybody the time to explain whether or not I can help them. I love helping people get into a home. I think it's an amazing thing. I enjoy a lot. I care about it. So if I can be in any way an advisor, regardless if I'm involved, I do it all the time. I just find it, I think many people are very nervous and dissuaded, and they don't realize all the different options. There's grant programs out there. Sometimes your company will give you a loan. There's a lot of ways to get into home ownership, and I think many people just think everything's 20% or what's the rates. There's a lot more nuance to it, and if you can just give somebody clarity, the best thing to do is just have a plan. You want to buy a home, let's see realistically what you need to set aside every month for the next 2 years. Will that get you there? What are you even open to buying? So giving somebody a clear picture, I think a lot of people make assumptions. So happy to chat, happy to reconnect with you as well. So I appreciate Chris having me on the show.
All right. Thanks, Michael. Appreciate it. We'll talk to you next time.
Thank you.
Thanks for tuning in to this episode of the Cash Flow Authority podcast. We hope the insights shared today help you take the next step toward optimizing your finances and building sustainable wealth. If you enjoyed this conversation, please take a moment to subscribe on your favorite podcast platform and leave us a review. It helps other entrepreneurs and investors discover the show. And don't forget to catch the next episode for more insights. Until then, keep mastering your cash flow.